Hi, and welcome to this video cast from realestate.co on the Unconditional blog. This week we're looking at the picture of the property market. The latest statistics from the Real Estate Institute came out for the month of September. And it's quite interesting because we're definitely at the key part of the year as we're in the start of the build-up for spring, an active time on the market. And the figures are certainly interesting, worth looking at in detail. The first thing I'd like to just highlight is the overlying picture is we're still in New Zealand in a quiet market situation. To give some perspective to it, the month of September saw just over 4,300 new properties sold in the month across the country. Now, to give some perspective to that, if you go back to, say, the 1990s, there were around about 6,500 sales a month. And then as you came through into the last decade, so that peak time of 2002 to 2006, it actually rose again to nearly 8,000 properties a month being sold. And so we're clearly seeing a much quieter period and a much quieter market, and that is still the factor that is affecting the market. It's not overly depressing the market, it just means we're on a different scale. So 4,300 is certainly lower than we've seen in the past. Now, what is interesting is, in looking at these figures, what I'd like to highlight is we not only look at the actual number, but what we look at is called seasonally adjusted. Now, simply that is taking the raw numbers and adjusting them for the fact that some months historically are very active and have a higher number of sales than low months. And if we seasonally adjust September, as we have done for all the months of the year, you see the ability to compare month on month. And if I take that for the national figure for the month of September, the figure is comparatively just about the same as the previous month, up a little bit. So it means that the property market in its current trend is pretty level, but it is picking up a little bit, even on a season-adjusted basis. Now that's the national picture at 4,300. It's really important, and it will obviously be critical to understand the impact that the Christchurch earthquake has had on the property market, because Christchurch is a significant part of the New Zealand market. Somewhere around 15% of properties sold are in the Canterbury region, which obviously includes Christchurch and other areas that were affected. Now, those sales were down significantly, and that's not surprising, and it may take a few months before the market comes back to a more normal level on that basis. Seasonally adjusted, Canterbury region was down 39%, so undoubtedly the effect was quite significant. On actual numbers, 359 properties were sold in September in the Canterbury region, which, when you kind of pause for a moment and reflect on what went on down there, is actually pretty amazing, because clearly the impact at the beginning of the month of an earthquake really did affect everyone's confidence, the social structure, the economic structure. And to see over 350 properties sold is a testament to the fact the market's still active in that market. Now, that being a key factor, what really has to be done is taken out that factor in the whole country overall. So what I've also looked at is the national picture excluding Canterbury. And in fact, the national picture excluding Canterbury has sales up 7%. So the factor of Canterbury is depressing the market sales overall. So underlying it is a more active level of those regions outside the Canterbury area. The one area I'd like to highlight and sort of draw attention to is the analysis of the Auckland market. Now, Auckland is the largest of our cities. It's around 35–40% of the whole market. And in fact, the figures from Auckland are actually quite strong for the month. A total of 1,655 sales in the month. Now, if we adjust that seasonally and look at it compared to August, it's in fact 12% up. So the Auckland market is actually beginning to pick up quite strongly. It is showing a lower sales than this time last year, but then everything is, because 2009 was quite a pickup from 2008, and 2010 has come down again. So you've got to look at the kind of indices, but the highlight I'd make is that the Auckland market is really driving quite a lot of the growth for the whole country if you take out Canterbury. Another key city obviously is Wellington. Now, Wellington is almost static. Month on month, seasonally adjusted, is down 2%. So we've got an active level in Auckland, 12% up seasonally adjusted, a fairly flat Wellington, a significantly down Canterbury at 39% down, meaning that the overall picture of the whole market is pretty much level. So that's really the picture of property sales across the country. Now, if we look at the sales price for the month of September, I want to talk about the pricing as measured by the Real Estate Institute across the country. But before I talk about the individual figures for the month of September, I thought I'd just highlight the choice of statistics. Now, you may be aware there are a number of reports of property prices that come out each month. And I just wanted to highlight each of those and just reference where they're derived from and why, particularly, the pricing model I like to use and the one I referred to in looking at the September performance is what's called Stratified Price Index. But let me just for a moment explain the difference between the two. There is QV. They have a valuation model for pricing. The Real Estate Institute have a median sales price. They also have a stratified price. And then additionally, what somewhat differently, but we do report on it, is our own realestate.co.nz property report has the asking price. So dealing with those individually, QV produce a price which is based on valuation across the country over a period of recent months. So it isn't the exact sales of those properties, it's more using their capability and skill in valuation to give an indication of what the values of properties are in suburbs, in regions across the country. They produce that on a monthly basis. It's based on historical sales that have been complete transactions. Differently, the Real Estate Institute record the sales that occurred in the last month, so in this case September, and what they'd take is a median price for unconditional sales. That is not completed sales, it's actually ones that have gone unconditional. Now, a median, of course, is you line up, say, 100 records and you look at the midpoint and say that's the median. Now, that's a good model when you've got 4,000 properties as we had this month sold. But when you go down to smaller subsets, if you've got a skew to high-priced property or low-priced property, you can get skews in there. So there is a tendency when volumes are low or when external factors, it can affect median price. That's why the one I'm keen to use as a model, and I do on the Unconditional blog, is what's called stratified price. Now, this has been put together with the expertise of the Reserve Bank, using the Real Estate Institute statistics. And this is a weighted model which allows for the representation of the fact that some suburbs are higher priced and some are lower priced, and the factor of how much sales occur in each suburb. Somewhat complex, I do appreciate, and if you really want to understand more about it, just go to unconditional.co.nz on the Unconditional blog and enter stratified as a keyword on the search. And you'll see an article that I posted explaining how it's calculated. But simply put, it is a weighted price indication and therefore has a lot of robustness and obviously comes with the backing of the Reserve Bank. Now, the last pricing model that I just want to highlight is our own New Zealand Property Report asking price. Now, that's different because that's not the sale price. That's the price based on the number of listings that have come on the market in the month. And it's more a kind of lead indicator because, of course, the Real Estate Institute and QV are based on historical sales. So it's a little bit of kind of introduction to the issue of pricing. Let's look a moment for the September pricing. And based on the stratified price, the national average was just under 360,000 across the country. That was pretty much the same as the previous month. Compared to a year ago, down 1%, and compared to the peak of the market, and this is the interesting perspective because we're still coming away from the peak. And that peak for national prices was back in November of 2007. So we're pretty close now to 3 years past the peak, and we're still 5.6% down. So we've yet to climb back up to exceed that. So prices are pretty steady month on month, down 1% on a year ago. Now, obviously, the important thing is to start breaking that down into the regions. And the first region is Auckland. The stratified price for the Auckland region for September, 487,800. Quite a significant increase on the prior month of 374. So it was up just under 3% in the month, which is a big increase, interestingly. It is down, though, on the long-term peak of the market in Auckland, which in fact was over 3 years ago, back in July of 2007. So we've yet to come back to that peak in Auckland, but the recent couple of months have been increases month on month based on stratified price. Turning to Wellington, 403,000 was the selling price on a stratified basis, down 2% on the month. And that is an interesting market because That is the only large market in New Zealand where the peak of the price has actually been exceeded. It was exceeded in July of last year, and therefore we're already kind of down a little bit from that. So that's not looking back over 3 years, it's looking back just a year, and it's 2% down from that. And then lastly, the Canterbury region, which is the other major region of the country, 330,000 was the stratified sales price. Now that is a figure that was down 3% on the month. Now the issue here is to what extent the effect of that lower sales and the earthquake factor may have affected the sales price. Difficult to read, and therefore all I'd state is at the moment it's still down compared to long-term average, or the peak as it were, and we'll have to see how things go in the next couple of months. So that sort of covers the picture of pricing, which is still not getting back to the peak in many areas. Some strength in Auckland, which is interesting. It certainly mirrors that volume sales increase in Auckland on a season-adjusted basis. So there's a pretty comprehensive picture of the statistics for the month of September. All of the statistics I've referenced, you'll find in greater detail together with charts highlighting what I've described in trends and peaks. And they're all posted on the Unconditional blog on unconditional.co.nz, which you can go to and view and look at those statistics. So you're welcome to have a look at those. Thanks for joining us. Thanks for being a part of this webcast. Come and join us again. We'll be doing another one on more information about the market and real estate in general at the next time. So thanks for joining us.